Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the August 25th magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence behind financial freedom. Now, I hope everyone out there had just simply a fantastic weekend. I know I did, but it's Monday morning, so let's make sure it's magical, magnificent Monday morning. So let's make sure that you and I, that we do all that we can do to get all that we can out of today's day. How about that? Now, I'm going to do everything that I can during the next couple of hours to share with you extraordinary tools that help us understand where price is headed to in the markets. Those include the A to B equals CD tool. That's our lightning bolt pattern. We take a look at Fibonacci expansions and contractions because the markets are doing one or the other. We take a look at Japanese candlestick charting. And the reason is because the bulls and the bears, they got to show up for work each day. It's their responsibility, it's their job to identify different signs and leave those messages for you and I. So we'll go take a look at those. And you know, folks, what we should always remember is that fortune knocks at the doors of those who are prepared. Henry Ford once said that nobody can really guarantee the future. Boy, was he right about that. He also went on to say the best we can do is size up the chances, calculate the risks, and then just simply estimate our ability to deal with those risks and then make plans with confidence. Of course, what Stevie likes to say is take massive action. Hey, this is a call-in talk show. That means we'd love to hear from you. So just get over that little hurdle there, that little anxiety. I know what it's like to call into a radio talk show. I, too, get a little anxious, if you will. And but just give us a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. We would love to hear from you, and then you and I, we can go hunting. And whatever it is you're looking for, we can go hunting for the bulls and the bears. So this is Magnificent Monday. Of course, it's TFNN. I'm Steve Rhodes, and welcome to the show out here right now. We've got Dow futures are up 67 points, trading out at 17,060. S&P futures up nearly 9 points, traded 1966 and change. NASDAQ up 18.5. They're trading out at 4,073. Russell 2000 up 7 points, traded 1166. King dollar on the move this morning, up 200 ticks, up 20 cents, trading out at 82.58. We're going to take a look at the Great British Pound. It has the chance to give us the first bullish reversal signal after its cascading move to the downside out there. That bullish signal being a key reversal day. But there's a lot of time left in the trading session, so we'll see if the bulls can pull that one out. Gold is back $2 right now, trading out at $12.78, up against the bottom of its rising price channel out there on the weekly chart. So this week being very key for gold. Silver's down 3 pennies. She's trading out at $19.35. Light sweet crude is flat this morning, off 7 cents, trading at $93.58. A quick peek across the globe. We're going to find over in Germany the DAX. It is like August Fest, I suppose, because the DAX is up 113 points, up 1 2/10%. Flat market in the FTSE. In Asia last night, a little bit of a mixed bag. We had the Nikkei up 74 points, the Hang Seng up 54, and the Shanghai down 12. But let's get back to our markets here right away. Let's go take a look, see what these futures really mean to us. Let's start by taking a look at the 4 daily charts for the index futures. Well, I got to get to the right tab out there. That makes it a little bit easier. Now, in the if you're watching us on TigerTV, and I hope that you are, of course, you might be listening to us on the radio, or better yet, even watching the show as one of those windows inside version 12 of eSignal out here. And we take a look at some of our eSignal charts. We're going to take a look at the daily charts. Let's start off. The lower left-hand corner is the NASDAQ. Upper right-hand corner is the Dow. Lower left is the ES Mini, and the upper left is the Russell 2000. But let's go take a look at the NASDAQ futures first. As you know, Stevie likes to say it's really all about the NASDAQ. This is the area where all of our strength is coming from. Not all, but certainly it is an area that we want to monitor. Now, what we can see out here, number one, we can see that the price is above that longer-term rising price channel out there. No big deal. So the change in trend is in place. Those are the yellow diagonal lines. Now, that's a long-term rising price channel out here. So we know that price is above that. We also know that price is above the 39.9125 level. That was the swing point from July 24th, and quite frankly set up a consolidation pattern or consolidation move, meaning that your measured move can be anywhere from, as far as points, where do I have that? Got it somewhere. No, it's probably right here. I know if I just switch over here. So you're looking at the NAS. Well, that's the composite. It's about 165-point breakout out there. But let me come back to the futures contract. Let's just take a look at Fibonacci expansions, just normal expansions out here. We're going to go from that swing point from July 24th down to the low that came in out here on the trading session of August 8th. You can see we're well above the 1.272 expansion. It says that we ought to see price inside the NQ get to 4,093 before it does anything else. So that's another 20 points higher. So if you're in the markets today, if you're long, if you're short, whatever it is, our expectation should be, because we don't see anything otherwise at the moment, expectation ought to be that we see a move up to 4,093. Can it get above the 1.618 expansion? Absolutely. Of course, the market on a daily basis is in the overbought range out there. That's using the 14-period relative strength indicator. Typically, the markets will start to work sideways or pull back out there. I can't tell you which one it's going to do, but our expectation as far as taking a look at the NASDAQ futures, 4,093, another 20 points higher at a minimum out there. That's what's going on inside the NASDAQ. Let's go take a look at what's going on in the Dow out here. Now, the Dow is probably the most important chart to watch. Not the futures. Well, the futures contract too. The futures contract has a 3 drive to a top pattern. That first drive is right out here from June 23rd. That high makes a higher high back here on July 7th. About a 1.272 expansion as was doing that. That's at 16,994. And then that third drive, that's really the day that we're paying attention to. That was that key reversal session. Remember I mentioned a key reversal day inside of the currency pair for the Great British Pound U.S. dollar. So we'll take a look at that here either in the next segment or maybe we'll get to it soon. If we take a look at that trading session, that's the third drive, 3 drive to a top patterns. Now, in this case here, it absolutely worked. So I don't know. I got to really go back and 3 drive to a top and bottom patterns, they are difficult to form out there because they're a thing of symmetry. You don't want to really force the pattern. That means you want to see the same number of trading sessions. You want to see Fibonacci expansions. Otherwise, it's going to be some other type of pattern out there. Now, that 3 drive to a top pattern, that absolutely worked, and we saw price move all the way down to the bottom of a rising price channel. This is the red diagonal lines going across my screen. Now, here's the key, though. That 3 drive to a top pattern is really more bearish than you just have, or should have been, more bearish than you just had a correction that brought price back down to the bottom of a rising price channel. So, what does that mean? That means that it's one of the most bearish patterns out there. It says, number one, you get a close above 17,085, even if it wasn't a 3 drive to a top pattern. That is resistance, and old resistance should become new support. So in the futures contract, 17,085 is the level that needs to be monitored. So far, intra-session high, 17,072. So that level is going to be tagged and tested and maybe rejected or maybe just simply used as a continuation move. Now, if there's a continuation move in the Dow, just to give you an idea as to where price could head if it gets above that level out there. The 1.272 expansion for the Dow out here takes us into the 17,323 level. That is nearly another 270 points or so above where we are at right now at the 17,061 area. So very key battle should ensue out here at that 17,085 area, and that is for the Dow. Of course, if you take that out, you get above that, you close above that. One of the most bearish patterns in the market has failed. And that does have some meaning. Unless price gets back below that area, then you'd have a false breakout. But otherwise, you've got to go with the information that you've got at hand out there and not really fight the trend out there. And that is not just that being the months of August and September, worst 2 months of the year out here, you should be expecting some sort of decline. So if the market can defy that as well, boy, it tells you about a lot of strength inside the market. If we take a look at the S&P 500, well, the S&P 500, it is up and above its July 24th swing point. That was its most recent swing point high. And that was measured out at 1985.75. You're at 1996 right now. That means you've got an A to B equals CD pattern that suggests 2024 would be the number. And if we just simply take a look at expansions of swing points out here, it says the next stop on the move up right around 2011. You're at 1996. That's another about 15 points to the upside. That really should be our expectation inside of the S&P futures as we speak right now. Let's go take a look at the Russell 2000. has been rather weak out here. What the Russell 2000 is doing right now, it's trying to make its way up to 1169.60. That is the 0.618 retracement of its move down. This is a consolidation pattern du jour out here, waiting to see which way this breaks. That'll really give us a signal as to what the markets are going to do out here. But the July 1st high, that's your swing point to measure your retracement level, the top of which is 1210.70, down to the low that was put in here on August the 1st, and that was out at 1103. From top to bottom, the 0.618 retracement level right around 1169.60, and that looks to be where it is headed next. It gets above that. And I don't mean 1169.70. I mean, if it gets above that, let's call it 1173 today or so. Pretty good chance that you're going to see 1187 before you see anything else. And that is on the 4 daily contracts for the futures. So that means we've got enough time here to go take a look at the Great British Pound U.S. dollar. Let's go do that. Let's put that chart on the screen here. We'll just cover the currencies rather quickly. Now, what we know about the Great British Pound U.S. dollar weekly chart, monthly chart look very, very bullish out here. However, it made a high thus far, July 15th. That high out here was at 1.719. And since then, it has been in a very linear move down, as if central bankers, because these moves here, it's more like a trading desk getting orders to sell, but not too quickly. I mean, this is as orderly. Normally you see this like on maybe a 10-minute chart here, where you've got some desks where they're just simply trying to unload their position, and they're just trying to maintain balance out there. And that's typically what you would see here. Hey, let's just take a look at today's action. If we take a look at Friday out here, the high was 1.6596. The high today, 1.6597. One little pip above the Friday. And you can see the low here, the close so far, the low has exceeded Friday's session as well. So as long as we get a green candle today, any kind of uptick above the price level of, let's see, this opened at 1.6544, so just 1.6545 would actually do it. Now, you'd like to see more conviction than that. In fact, you'd like to see it be a bullish engulfing. You'd really like to see the Great British Pound close above 1.6578 out there. And then maybe you've got a retracement that'll be underway. But right now, you got to say that it would look like any retracement is going to be the B to a C of an A to B equals CD to the downside. But you can see the Great British Pound moving up to about the 1.6785 level, so long as we get that key reversal session today. 877-927-6648. Steve Rhodes, TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. In the pre-market out here, we've got Intermune, ITMN, is the ticker symbol. Now, they closed at 53.80, trading up $20 out here. I don't see what's going on inside here. Oh, let me see. What's this here? Roach to buy Intermune for $8.8 billion. Okay, there we go. The news finally popped up on my screen. Then you've got consolidation going on, it looks like, out here between the Donut King, Tim Hortons out there. Mostly you see him up in the Detroit, Canada area, Canadian company, and Burger King. So you get a Whopper and a chocolate frosted donut all at the same time. Boy, that is that would be heavy duty. Anyways, also moving in the market out here. Let's see. You got Facebook. I'm just looking for some individual stocks. Well, you got Apple. Closed at 101.32. Trading up about 60 cents right now. You've got Facebook. It closed at 74.57. It's trading out at $75 right now. Now, Facebook, let's take a look at Facebook out here. Facebook, it's got this nice high volume high. So that's where Facebook is headed to. Never actually came down to test the top of the gap, meaning the trading session from July 23rd. So July 23rd had a nice little breakout out there. 78 million shares, the top of which was 71.33. We saw a pullback to the 71.55 level out there. That was as close as she got to the top of that consolidation. So what Facebook is going to try to do now, because that is actually a swing point and with volume, probably more likely what Facebook is going to do is going to get to the top and then stall out there. And this could just simply be a consolidation somewhere between the 155-ish type level and this 76.74. 76.74 also happens to be its market profile high out there. Now, breaking through that, if it breaks through that, it can break a B point, it can break a swing point with light volume. What you like to see for confirmed A to B equals CD patterns, that would be a break of that area. But in essence, it's really already done that. And what I mean by that is let's just take a look at the stock chart here. And what I want to show you is the first swing point that you'd be looking for an A to B equals CD pattern is really the trading session, that little key reversal and bearish engulfing candle that took place here on March the 11th. And see how price got above that area, gapped above it? Well, the volume on that trading session was 59 million. And when price gapped above it, it was 124 million. So what we know about Facebook is not only does it have a high volume high, it actually has a confirmed A to B equals CD to the upside. And what I would be looking at here, you'd take a look at two different patterns. Let's take a look at the larger one for Facebook. The larger one says the low from November 26 is your A point. Your B point is going to be the same on either of the A to B equals C patterns that I would draw, that being the March 11th high. And then your C point out here being the April 28th level. So 1-to-1 A to B equals CD says 83.70. So if you happen to see Facebook get above 76.74, do it on lighter volume than that specific swing point from July 24th. Don't fret. If you're long the stock, your expectation ought to be that you should see Facebook. It would be natural for it to get into that 83.70 level out there. And don't just short it if it gets up and tests it and rejects that area. You need to see a break of a swing point to the downside, and you've got a real sign of strength out here on that July 24th session. We have not seen any kind of weakness at all, really, when you take a look at Facebook. So that's the larger A to B equals CD pattern out here. The smaller one, what we would do is we would just simply come down here to this trade. It probably has already done this. Maybe not. Well, maybe it did. I'm using the January 27th as my A point. The B point is going to be the same, and the C point out here. Oh, that didn't work real well. Sorry about that. I got to start over. That A point is going to be the January 27th low, the B point, the March 11th high, and the C point being April 20th. You had already completed that 1-to-1 when it had gapped up there. And when you gap up into complete a D point out there, that's typically not the end of the move. So it does look like Facebook is going to should be able to get over that 76, 74 level. Only time will tell, but that's what the probability suggests at this stage because of that confirmed A to B equals CD pattern. That's on Facebook out there. To the downside this morning, you've got Kihu 360 Technologies. They closed at 101. They're trading at $97 out here. Out with numbers, looks like, unaudited financial statements. Maybe this is a Chinese company out here. I think that it is. And I don't know. It doesn't say whether their accounting firm is Dewey, Cheatham, and Howe. But they did report earnings per share of about 30 cents versus 26 cents out there, but it's trading off. Also to the downside, Salesforce Innovation, CRM, is a ticker symbol there. They're trading at 59.30, only down about 50 cents. No big deal. 877-927-6648. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Off to the races. We got the Dow up 74 points. Trading out at 17,075. S&P up 9. Trading at 1997. NASDAQ up 25. Trading at 45.63. Russell up 7 points at 1167. New York Stock Exchange up 44 points. Philadelphia Gold and Silver Index off 50 cents. Down about 0.5% out there. Gold down 90 cents right now. Silver up 9 pennies. Leading the charge, the upside, well, you got Intermune, Tim Hortons, you got Lifetime Fitness out here. LTM's a ticker symbol. They're in discussions about converting to a REIT out here, so that is popping. Tesla to the upside, trading out at $261 right now, up $4. Auto Home, ATHM is the ticker symbol, up 7% out here. I don't see any news behind the equity here. Gilead Sciences up about $3. Baidu up $1.74. Goldman Sachs up $1.89. Amazon up $1.80. Celgene up $1.50. PepsiCo up $1.50 out there. United States Steel up 2.5%, up 90 cents. To the downside, you got Kihu 360 Technologies. That's off 6%, down to $6. Netflix off 67 cents. Intuit off 70. Nothing really large to the downside out here. Dollar-wise, other than Kihu 360 Technology. I do see the ES Mini. I've got that off on a different screen out here. I see that selling off just a bit as we speak. Now, key levels of support inside the ES Mini on the 30-minute chart here, kind of under attack at this 1994 level. I'd take a look at 1990, 1984 as being really key levels of support inside of the S&P futures out there. Let's take a look at. Let's go take a look at gold. Might as well do that off $1.30 out here. Let's switch over to this chart here, and let's go take a look at the weekly chart. Now, a little time delay here, but what we can see is if you come off of the candles from the trading session, this is a weekly chart, December 16th. If you use the close of that, if you use the open of the next week, December 23rd, if you use the close, in essence, of the week of May 26th, or the open of June 2nd, or the open of June 9th, again, this is a weekly candle. What you're going to do is you're going to get a very good bottom rising price channel. And so far, gold right now is just a trade. It traded down into it last week. It stopped there. It's trading back into it this week. A break of that area offers a weekly A to B equals CD pattern down to about the 1194 area. 1194 takes you all the way back, almost takes you back to the lows on December, the week of December 30th. I believe it was also December 30th, might have been the actual low, 1183.40. So that, if we see a break of this rising price channel, pretty good chance that that is where gold will head to. If I switch over right now, just do it on the same chart here to the daily. Now, the rising price channel lines are going to be just slightly off there. You'd have some different price channel lines, but here in the daily chart, you can see where price is up against that area. So nothing bullish that we see here inside of gold, at least not just yet. As long as we're over here, let's go take a look at the light sweet crude off 20, it looks like about 20 cents or so as we speak right now. Again, I got a little time delay there, but on its daily chart, what we've seen in light sweet crude, no, that's not your A to B equals CD pattern. That seems to have, let me go put that back in here. Let's go put in an A to B equals CD pattern. Your A point inside light sweet crude, June 25th high. Your B point below on July 15th, and the C point is July 22nd. So we can see our 1-to-1 A to B equals CD. That has been attacked. What the heck is that? It has been fulfilled. 1-to-1 A to B equals CD to downside, and we do have a new market profile that formed out here on Friday. So 92.84 is a key level of support for light sweet crude. If we use our market profiles, it says any close above 95.57, you'd have to consider that more than just a counter trend move to the upside. Now, what we can also see as light sweet crude was making a lower low, no bullish candle out here, it was doing it with less relative strength. That's on the trading session of August 19th. So it's another reason why we're seeing a bounce, but the bounce has been very limited inside of black gold Texas tea out there. Let's take a look at, let's go take a look at some things that are moving. You know, what's interesting here, if I go over to sectors, actually, with inside the S&P 500, I seem to have deleted accidentally my top 10 holdings inside the utility sector. So I'll work on rebuilding that a little bit later on. But here's 8 of the 9 sectors. And as we take a look at 8 of the 9 sectors, top 10 holdings with inside each of them, there's only one stock that is actually red, slightly red. General Electric down 1 penny. So otherwise, everything is mean and green out there, looking well from a weighting standpoint of those equities that can move this market higher out here. If we take a look at, and that's interesting because the one sector, let's go take a look at it, that it really has struggled here. This probably gives us a pretty decent cue as to what's going to transpire this week, but it is the energy sector, the XLE. If we take a look at the top holding out there, ExxonMobil, let's go do that up 20 cents out here. So not a big deal. But what do we know about ExxonMobil as we take a look at this stock chart out here? Number one, on a daily chart, that's what I've got on my screen here, it is holding its market profile lows. It was making a lower low trading session of August the 7th. It was doing it with less relative weakness out there. But right now, just consolidating at these lows. Where ExxonMobil is going to really struggle is the July 31st gap down. That had 18 million shares. Kind of interesting. The market has been able to get above that area, but ExxonMobil has not. Imagine if I think Exxon might be the number one holding inside the S&P 500. It's in the top 5. That is. And I believe that to be the case. But the S&P 500, no problem taking that out. But imagine if ExxonMobil had participated out there. Well, it hasn't. And that says, at this stage here, just consolidating at the bottom here. So nothing big inside of ExxonMobil, although it's trading up just slightly higher this morning. Chevron, CVX is a ticker symbol up 31 cents. That's up a quarter of a point. Let's go see what Chevron is doing. And really the same pattern that we are looking at. Now, its downdraft was not as big on July 31st volume-wise out there. Nonetheless, that is still your area of resistance, your market profile high. Your unfair high happens to be the level that is also that the gap-ish down area, 129.15. So right now, just a consolidation move sideways inside of Chevron. Number 2, though. Number 3, Schlumberger up 39 cents this morning out here. Schlumberger is the one, if this is going to take off, Schlumberger is the one that will get the most energy, or should. Prices just simply come back into its breakout area, wide-ranging bar to the upside, accelerated volume, all of that on June 25th out here. It has broken its trend, but it's done it by just moving sideways. The trend that I'm talking about is the one coming off the July 1st high. The next touch points, you could use the July 17th high out there. And that trend has been broken, but I hate when trends are broken just simply by moving sideways out there. That is not massive action. That is called laziness out here. You got Pioneer Natural Resources up a couple of bucks. That's the leader percentage-wise amongst the group. So let's go take a look at it. PXD is the ticker symbol. And PXD, let's go see what this is doing. Running right up against its resistance zone of its market profile. 206.88 is the number so far. Intra-session, 206.73 is the number out here. It's got likely going to have, it's got some number of different supply little lines out here. You have your choice. Either August 1st, August the 5th, and even most recently here on August the 14th. So Pioneer Natural Resources, did it pass the B point with volume? Yeah, it did. Pioneer Natural Resources, unless it takes out this C point, 208.84, it's actually setting up for an A to B equals CD to the downside out here, albeit a complex A to B equals CD structure, potentially. But it needs to break that market profile low, 200.64, but it has broken 201.76 and has done that with volume. So it has that potential for that A to B equals CD to the downside. Let's go take a look at the general. The only one that is really struggling under, I see Google's off 74 cents right now, but otherwise, boy, it is green across the board inside the top 10 holdings, with inside 8 of the 9 sectors inside the S&P 500. If we take a look at General Electric, let's go see what General Electric is your leader out here with regard to what the Dow wants to do. So let's take a look at its current channel line out here. Let's go draw those in. And as we take a look at that, just simply going to come back here to the trading session of June 10th out there. That's going to be my channel. I meant to, let me see here. I'm going to come back and draw it back in a little bit here. So that might be the channel line that we'd look to the there we go, to the from the top of it. Now what I can do is just move this back. I'm going to try to move this back. There we go. So there's our channel line here for General Electric. So General Electric is just a great tool as far as a leading indicator for the Dow, especially when you go ahead and you compare it to the Dow. So let's go do that. Let me find my other chart out here. Give me a moment. We'll pop that up on the screen, and we'll just kind of put the two of these things together out here. This is my set of different divergences, not all of them, but a set of significant divergences, and GE happens to be one of them. When you have a divergence inside GE, meaning it's going higher and the market's going lower, tells you that the market's eventually going to correct itself to the upside out here. Likewise, we have just the opposite. When GE is heading lower, and I don't mean for the day. I mean, you got to get some type of divergence over a series of days out here. And what we can see right now, so this is kind of interesting, is if I take a look at the high that was made here in GE, which looks like right around August the 21st out here, what we've seen is GE has actually traded lower since then. So what we're now starting to get, it's kind of interesting. I'm glad you asked me to bring that up, folks, because I hadn't looked at it here over the weekend. But what we're starting to see, and so it would be important to watch how GE trades. What we are starting to see here, I'm going to put the divergent pattern in here, so you're going to see the Dow. Now, you can't be using this as a timing tool, But what we can do is we can go take a look at GE and see what it is doing in the Dow and use those as timing tools. But right now what we've got is we've got a divergence in price between GE. Look, when the market was making a low, the Dow specifically on August the 7th, out here, remember, the futures market was the August the 8th. But as you take a look at August the 7th, what you'll notice is that this is the, if you're looking at my chart out here, you'll see that GE was moving lower. I'm sorry, you'll see the Dow was moving lower. You'll see that GE was actually moving higher out there. Pretty interesting, isn't it? Well, right now we've got just the opposite in place out here. And if GE, let's go back to GE right now. So let me put this over here. If GE continues to head lower, it doesn't have to get all the way back to the top of the descending price channel out there. That's just one area of resistance. If I take a look at retracements from its most recent swing point high, meaning July 16th, down to the low that was put in here on August the 1st, well, you know, it did not get all the way back up to the 0.786 retracement level. That would have been 26.63. Did make it slightly above the 0.618 area, and has since moved back below that price point. So we'll just simply keep an eye in GE. Let's take a look at this little sub-correction price channel that it has been in here over the last several days. Let's go draw that channel line in. We'll go ahead and paint this a different color. So after I get this in place, so we'll say that is probably the top of the bottom of the channel, and we're probably somewhere like right around there. There we go. Let me go ahead, come here. Let me edit this thing, and we'll go ahead and change those colors. Let's change that to a what do we want? I like that little light blue color out there. That seems to work very nicely. Let's put that here as well. There we go. Apply that baby. I don't need to extend that. We can just do that right there. I can just pull it back. So there is a little sub-correction price channel that GE has been trading within. So what we'll really watch here in the case of GE, maybe for a further signal, is a break of this little rising price channel, this little sub-correction price channel that price has been traveling within. We can see how, so far, that is held as support. If that holds as support, probably what we'll see is we'll see GE go run back to the top of that yellow descending price channel out there. It would be very bullish, both for the markets as well as GE, to break through that level. That's the diagonal line. That's a yellow diagonal line going from left to right out there. So remind me over the coming days for us to check in on GE, especially that correlation between GE and the Dow out there that is beginning to show us. Now, of course, if we take a look at the futures market out here, let's go do that. Oops, that's grab the wrong tool. If we take a look at the futures market, let's go take a look at a 120-minute chart out here and see what we might have in the case of GE. Let me refresh this right here, and that'll make it a little bit easier. So if we refresh this, there is the potential. So there's the potential. There is a potential for, on the 120-minute chart, for a Chapman wave peak G out here. That's coming off of the low, that little scary day, which was a Friday. That was on the trading session of August the 15th. That was Ukraine was crossing the border out there. So long as you don't see a move above the high that came in here at 4 a.m., that high, by the way, is at 17,072, and we're only a couple of points away from that. When we come back from this break, we'll go further evaluate the 120-minute chart, see if we can get any kind of read on the Dow futures. 877-927-6648. Steve Rhodes, TFNN. Hope you're up.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this prospectus and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. We've got the Dow's up 87 points right now. She's trading out at 17,088. The S&P is up 10. Composites up 26. Russell's up 7. NDX 100 up 22 points. Now, before we went to breakout there, we were just taking a look at the Dow out here on the 120-minute time frame. I've got a couple of different tools up on the screen out here. One, we've got a price relative strength divergent pattern out here. That's where we see price moving higher with less relative strength. We've got that in place as we speak right now on the 120-minute time frame. Now, the candle that actually formed out here at 4 a.m. is a shooting star. So that's being tested. The top of that candle is 17,072. You're trading at 17,070 right now. Of course, it's a 2-hour chart, and that ends in about 4 minutes and a change out here. If we do see it close above that, then that level of resistance is gone. Then you've got another, again, even during this session right here, the Dow is moving higher with less relative strength. That means, though, that the pattern couldn't confirm for another 2 hours. That would not be until 12 noon, the time that Larry Pesavento, that Basil Chapman would be handing the baton off to Larry out here. So you do have price moving higher with less relative strength. It is not a Chapman Wave G, that is for sure. Reason being is that we did see a tick above that 17,072 because we got up to a level of 17,073. So we can delete that one. But you are in that fourth wave as we speak right now. So you've got two patterns here that are lining up together at this stage. Now, if we put the third pattern there to really pull it all together out here, if we take a look at the TAS market profile, not until you would see it close below 16,973 would that give us an idea that there would be some kind of intermediate term top in place out here. And then what we can do is we could take a look at retracements. And from a retracement standpoint inside the Dow futures, if that was to occur, I'm not saying that will, but if that was to occur, we were beginning to see a retracement. What I would do is just come off of that swing point there from on August the 15th. That would be the first place that I would look at. I'd go from that low to the current high that came in here, so right around the 17,073-ish level. And then let me do this here. I can let me just turn this over to one of my other defaults out there. There we go. And that would say that you could see the Dow pull back in at 16,873, 16,745. But look, these patterns right now at this stage here, they're just forming. As I say, if we see a close, it looks like we're going to here, a close above that little shooting star from 4am at 17,072. That pattern, you like to have a number of patterns here line up at the same time. Of course, that would be the gift if the market would do that for us. But any close, again, above 17,072, and you got to wait at least a couple more hours for the potential price relative strength divergent pattern to show up. And that is what's going on inside of the Dow futures out there. If we take a look at the VIX index right now, let me pull that over. Not really a ton going on out here, but what we do know, what you and I do know, is so long as the VIX trades below the 50-day exponential moving average, which right now is priced out at 12.94, and it's trading at 11.56. So long as price remains below that, the market stays in bullish to sideways moves out there. Now, that won't retrace a bit. If we see a move from 11.56 to 12.94, you will. But in order for real damage to be done in these markets, you got to get that VIX above the 50-day exponential moving average. Right now, all things point to being bullish. In fact, very bullish out there. So, folks, it is Magnificent Monday. Thanks so much for joining us here at TFNN. And don't forget, we start our programming 8 a.m. each day. Our man John Logan kicks us off. We go from 8 to 6. So have a great Monday. I look forward to seeing you in a few or bright and early tomorrow morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.